welcome to the Zoom call with Charandeep and Varun of Girik Capital, and of course Kenneth from Old Bridge now and the erstwhile fame of IDFs. And the reason for us curating and having this particular Zoom call was primarily about the elections and the results around the corner, and what would be the impact, if any at all, on the market, since most of us possibly already feel that the markets have factored in whatever news it might be, and if there's anything that we as investors need to take in terms of action or take in terms of caution.
So as a whole, markets are trending expensive, but there's no solvency risk like you've had it in the past. We like the opportunity that is presented to us, and we're looking at large opportunities outside the market, using India's capabilities to make India a manufacturing hub.
I think a lot of what Kenneth said does resonate. We do find markets to be on the more expensive side as of today. The Nifty trails at about 24 times. And I think that's obviously not the good news, but the good news is that there is a reasonable amount of growth expected in the next couple of years. So, that multiple obviously 2-year forward comes down quite dramatically.
Does this election result that is going to be coming up soon in the next 10 days, is this going to impact yours, whatever it is that you are doing in terms of your strategy for investing? And where do you see that playing at the moment, because it's just 10 days ahead from today?
So I really wouldn't look at elections as an event, although it dictates the course correction if there needs to be one at that point in time. A lot of us are very quantitative driven in the way we approach the entire subject, right? And what I highlighted out here is, irrespective of which government comes into play, the cash on balance sheet of companies and their ability to generate cash from their existing business is not going to go away.
There's a bit of an insulation, in spite of which whatever your strategy is, that it's relatively insulated from what the results of the elections are.
Yes, definitely insulated from what the elections are, simply because corporate India is at a place and a point which is much better than they've ever been.
So, as per you, this is just a couple of weeks down the line. The results of the elections should not have any impact on the Girik portfolio, because Kenneth was very clear that his portfolios were hedged because of the style of investing that they have. What about you?
So maybe I'll tell you what we do best. If you see in our style of money management, what we do is we follow earnings momentum. We want to buy a leading company with amazing earnings acceleration at a value that we are comfortable with, so we can make IRR for our investors. That may at any point of time be delayed by a couple of years because of macro factors beyond our control. The other thing is that, yes, look, based on a huge political change, you may get some other sectors that do well. We're very open to looking at new sectors. We're very open to looking at stuff that comes up on our screener. So maybe a new government decides that we want to focus a little more on something. We'll look at it. But I think over a 5-year basis, this is something that doesn't really make us uncomfortable. But yeah, there could be an overnight reset. And you could go into a situation where there's very low returns on a portfolio from a 1 or 2 year perspective.
Thankfully, you're saying that there isn't that much of a systemic risk. Even if there is a change in government, there isn't a systemic risk. Am I right with that, Kenneth?
Well, every time you've got the ratios that I highlighted it to you, it wasn't the same government that was there in power. I mean, 2004, 5, 6, 7 was a very different government. This time there's a very different government, very different leaderships at all points in time. Look, we're all capitalists, okay? And at least the formats have been set. The formats have been set in a way that this is what works. Now every alternate government, even if they come into play, or any alternative leader from the same government, it's got to work as hard or double the speed to make sure he comes back in the next time. Not going to be any different. It's like portfolio managers who want to be number one at all points in time. Okay, and when you're at number one, you try to put in that much amount of effort to make sure that you're delivering the same process again and again and again. So I think that's where we are.
Which is a brilliant thing, that there's a system and a process into place with the country, and therefore even if there's a leadership change at the end, There has got to be that same system and process for everybody to benefit, including the political ethos of whatever it is that they are there. So that's actually comforting news to hear. And I would imagine, Charandeep, you also echo a similar sentiment.
Absolutely.
What the impact of global markets on local markets. So we've also spoken about the geopolitical issue that has been there. And that is something that I remember the time with not in the Russia and the Ukraine war. So at that time, the markets did correct, but it's still dragging on and nobody cares at the moment. So as you said, there's another sector of defense that is getting into a place of strength in terms of capex expansion. But of course, yes, we have the US around the corner, and that is the mothership and the mother of all markets. And the interest rate situation over there and the inflationary situation over there. Would you like to throw any light on that, Kenneth?
Well, the US is doing something very simple. They're keeping interest rates elevated and they're keeping inflation elevated so that they can inflate themselves out of the debt problem that they have. So financially, I think most of the money is moving from the consumers back to the government again, right? While that's the case with the US, I think any continuation of any different government also. So Biden's taken off from the page of where President Trump left over, and if Trump comes back, he'll take over and do something which is not very different from what Biden's doing, except for probably his foreign policy will be different. But the wars are going to be there because whether it's for the Arabs or whether it's for the Americans or the Chinese, okay, it's a fabulous GDP multiplier. China gets its gas free, Ukraine gets its defense equipment free. US manufactures everything and sells it to Ukraine. US just put in $96 billion of defense aid to Ukraine and Israel, of which $70 billion is manufactured in the US itself. So those things are going to be constant for a while. But even if that stops, the rebuilding of this entire economy could also be a significantly large GDP multiplier.
So what is your view on China? Because there's a lot of silence from there. Sooner than later, aren't we going to be, we'll have to hear from them, isn't it? And they do play a very important role.
So it's an interesting question, and some I put out a very I would say cryptic note in my last address to investors, where we highlighted that the China index, and I specifically mentioned the small cap index, is trading at its 2013 and 14 lows. It's not because the country is doing badly, etc. It's because profitability in the Chinese economy doesn't exist. And China is pumping a lot of money back into its corporate sector. So the switch that the Chinese have is from funding retail or funding individuals to funding corporates. Now that shift is taking place. Okay, corporate profitability in China is coming back. For corporate profitability to come back, the marketplace has to be inflationary. So China has to take prices up. Profitability of corporates will come up. Okay. And that's how we tend to look at it. Now, if that plays out and comes through, then traditional sectors which haven't had pricing power comes back extremely strongly, which is why we base our entire argument saying that commodities is in a sweet spot today because demand and price competitiveness from the Chinese economy is intense. Okay, there's no demand, but the pricing is intense. That is going to go away, and if that goes away, then the entire price table comes up. If the entire price table comes up, profitability across the world does extremely well, and that's the best thing for governments also, because they inflate their debt away, their taxation goes up, and gets their balance sheets ready for the next round of social infrastructure that they need to put together. So China is important in all of this. It's a wonderful index to invest in, but if that index comes back, I tend to believe that the market will be inflationary. When it becomes inflationary, all corporate profitability will surpass its previous high.
I just wanted to come back and ask you a last question about India and the Modi government getting re-elected. Is that what you also feel, or what do you feel the situation is?
I do not want to sit at a judgment seat because I'm not an election analyst. Like I said, I base my sense on quantitative numbers. But whether Mr. Modi comes in or whether Mr. Modi doesn't come in, okay, things for the consumer is going to be extremely tough over the next 2 or 3 years, or maybe longer, because you are in an environment where wage growth is going to be slower than inflation. Wage growth is going to be slower than nominal GDP growth, and the consumer is going to struggle to keep pace with his expenses.
The consumer being under pressure, so basically going into another capex expansion mode is what you're trying to say in India, and that's what's going to give the next run in the stock markets in a very more stable manner, and not just dependent on a consumer-based demand supply situation. So you're actually talking about a more sustainable growth that is going to happen with the India growth story over the next maybe 5 to 7 years. Is that what I'm getting from you?
So the customer will come back. So don't worry about the customer. He has got to go through this pain before he settles his debt position, comes back to the market. That's coming back. That's not probably coming back near term, but that's coming back. We'll have to wait for that. That will create the next cycle, which is going to be larger than what we are seeing right now.
So basically, you've given us a lot more hope. So let me just move it to Charandeep, who's going to be, and Varun, who are going to be speaking a very, very different language itself.
So the risks in every market don't come from the obvious.
Right.
Okay, it comes from a place that actually blindsides you.
See, I'm assuming that anyway, both of you all are going to say the only best way of continuing to invest is SIP and invest on dips. I mean, this is what my standard operating procedure conversation of Sinhasi with all our clients anyway, on every dip, if it's more than 10%, definitely keep adding your money and never ever stop your SIP, including if Mr. Modi doesn't get elected to power.
I agree with him. I think barring any unforeseens, it's really the unforeseen elements that bring risk to markets. I don't think anybody knew that anything called COVID existed before it really hit us, right? The 2008 financial crisis was another such event. You're going to get falls from such events in the future, not from who's going to be your next prime minister, hopefully.
One of the things that we've noticed, because I've also been in this industry for now 25 years, especially over the past 2 or 3 elections, you've had worse black swan events than election results, like COVID or the Lehman Brothers collapse, etc. And therefore, the systemic risk of India, that is what is critical. The reform plays, or the way the foundation of India is strong, then what happens is the ball is rolling and nobody can turn this ball back. It's difficult to stop this ball rolling, since everybody is in it to make money. Everybody wants success. Everybody wants capitalism. And this is what also is resonated across the board with almost all astute fund managers. If you look at a realistic way, even if you see a 10 or 15% market correction, which may happen, even if Mr. Modi gets elected, because already the markets have factored this in. They've also factored in euphoria, and the euphoria will already get factored in, I would imagine, a day or two, right, before the election results, because it's all about conversations on TV and polls, etc. The polls itself may cause euphoria, and normally we've also seen that there will be possibly even a market correction of maybe a 5 or a 7 or 10%. And those are the opportunities for us to take in terms of an advantage. So if I might just summarize that in the next couple of weeks, when we do get election results, the foundation of the country is going to insulate us from any major changes in management of India, if there are going to be any changes in management. And keeping this in mind, if there is a new leadership, that person will have their own biases of wanting to introduce new things into the country. So that might bring about a newness to the investing, the investing universe, which is something that Charandeep and Varun might look at. And at the same time, because of the global way in which India is positioned in terms of a foundation, it's difficult to roll back and arrest this kind of growth, since capitalism and this growth is something that is going to be a common thread across all political parties. it feels good that we don't have to be, having nightmares for the next couple of weeks and sleepless nights, and enjoy results day. And if there are any dips in the markets, to use it as opportunities for us to add more to equity markets. Thank you all for joining this call. And if there are any more questions for Kenneth and Charandeep and Varun, please do feel free to message me or to message Team Sinhasi, and we'll be happy to get back to you.